You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair, it's time to sit back and talk to profit. Hey, hey, you talking to the prophet. Hey, hey. We talking condos and nice clothes and driving Lambos. I remember them night codes, we couldn't stand those. We tried to drive on them house roads, but had to stay low. Now there's solutions to hard bills we couldn't pay for. I talked to profit to get some profit, we couldn't change the top. If it's a stock and I need a cop it, I wait for him to drop it. Ain't no option, let's get it popping. We chilling in the drop. I need some crypto, put it in my pocket by any means I rock. This is the profit with Nick Black. It's time to chit chat. You know nothing about blockchain, we here to fix that. You want the news on them new stocks, this where you get that. So go and grab you a nice chair. It's time to sit.
Okay. What up, Jerry?
Hey.
Good morning, Nick.
What's the word?
What is the word? The word is rebuttal.
Rebuttal.
Yeah, I tuned into your show yesterday because I love catching what you got going on. And I heard the things I heard come out of your mouth yesterday about Michael Saylor. I just said, you know what? Somebody has got to be the voice of reason in this community. It might as well be me.
I do have a nasty mouth. Some would say my mouth needs an exorcism. So let's say hello to everyone, and then we will get into some pricing. We'll get into some news, and then we'll get into the crux of our conversation, which is Michael Saylor issuing junk debt for Bitcoin. Is he a genius or a freaking madman? Well, we're going to talk about it. There's people that are on both sides of the fence. So we're going to talk about that. Let's see who we've got. Let me say hello to, I have to find out where it starts. Where does it start?
At the beginning.
Oh, yeah.
Try the beginning.
I'm trying, but you never can tell with Theta. Belinda Cook, Virulo, Solid Gold, Beach Girl 30A, Stress Relief. Let's see, over here on the YouTubes, we got Jimmy James from Austria. I am actually part Austrian. Not enough part to get a passport, apparently. Scott, Todd B, Hits NDC, Brady. What up, Brady? Lori, what's going on? And who else do we got? Oh, I get that a lot, too. Also, I could have said two, but it would T-O-O. What? Yeah. Expat Matt, Biotech Breakout, Sylvia, Alan. What up, Alan? He's calling genius. He's calling genius. Alan, I don't know, buddy. We're gonna have to talk about it. Let's see. We got Candace, we got Scott Hill, we've got Eli, we've got Two Dep Pipeline, Antonio in the house, Adam, Jim. Make sure I didn't miss anyone. Juarez, ¿qué onda? Gordon Bennett, Stress Relief. Okay, Michael Saylor says, who is more stupider, them for taking my deal or me for doing it? What's more stupider? Yeah, I don't know. Okay, so let's go to our non-commercial breaks. 29 LH06, good to see you. I always wish there was a better way to say that. Sebi Seb. Okay. Let's go to our non-commercial break, and then we'll be right back. We'll get into the guts. We'll get into the guts of what's going on in these markets, which is really not much right now. There's not much wow. Sometimes there's much wow, but right now there's not much wow for good win. We are back. So we have Jerry V. Hall.
I love the applause. That's great.
Okay, Jerry, what's going on in your world?
I'll tell you, not a whole lot. And one of the things that I think is really interesting, and it's been coming to me specifically from a lot of the new people I've connected with who've kind of been in the market maybe a yearish or so, right? and they're like, man, it's really, I mean, what's going on? There's all this great news, and it's just kind of like the market does these little drawdowns and stagnation periods. And I'm like, you have to remember, number one, that there's really only a couple of 100 million maybe total people involved in this crypto industry-ish type of thing in a planet with 7+ billion, right? And until we reach the masses, there's only so much that 200 million can do. And if you look at the history of blockchain, there are few periods of exuberant up and to the right movement, and then long periods of time of kind of consolidation, stagnation, and it's just normal. So I think a lot of people have come to this space recently who have expectations that are not warranted, maybe. You know, they just expect every new month to be, boom, it's going to explode. There's going to be this explosion.
We do have to talk about that. This is a sidebar issue, but Jerry and I were talking about this yesterday. There's a lot of people that just showed up in crypto and they're justifying bad behavior because they're late to the game.
Oh, right? Yeah, that was a great, good.
Right? Like, I show up late to your birthday party, so I have to eat 10 times the amount of cake now to catch up. I got to catch up. You don't get to catch up. You're late to the party. Here's your piece of cake, or your half piece. There's not much cake left. Everybody, we're not all evenly. It's not like the universe says everybody has this many value units that they get given to them, whether you show up late or not. I can't. What was the analogy we were talking about yesterday? You start weight training because you saw something on TV. You got your LA Fitness membership or your Bally's membership, and you're like, well, I want to be ready to compete in the Olympics in the next like 3 months. I mean, I'm late to the game. Sure, I haven't competed my whole life, right? I haven't invested in crypto for 7 years or 6 years or 3 years. I've been in here 4 months, but I got to catch up because I deserve to be at the same place you are, Jerry, even though you've been in the space for years. I deserve to be equal to where you are right now this second. What do I have to do to just catch up? And then they use that to justify really bad behavior, leverage and gambling and all this kind of stupid stuff. Hey, guess what? If you're late to the party, sorry, you're late. It doesn't work. You don't deserve anything. No one here deserves anything. You do your research. You learn about the macro space. You understand how the markets turn, or you don't. You invest or you trade. Maybe you're better at it than the person next to you. You're only competing with, your own balance sheet, and you just try to add gains, but you don't deserve shit.
Well, it's like this. You've got people coming in because they knew Nick Black, or they heard about Nick Black getting thousands of % gains on his return. Same with Jerry, et cetera, et cetera. And the truth of the matter is it's because the time in the space, like, the person that comes in today and recognizes the same things we recognized about Cardano 2 years ago doesn't have the same opportunity we have, right? When we were buying Cardano at under a penny or 2 pennies or 3 pennies per unit versus today, I mean, it's a completely different thing. There's orders of magnitude that are only available at a certain time and space. And once you get beyond that, it's never available again. But that's not to say that this space still isn't the very best investment opportunity of every single person's lifetime, whether you came in yesterday or you've been here 5 years ago. It's just the difference of magnitude, right? It's the difference of, are you going to get thousands of % return on investment or just hundreds? Oh, or just hundreds. Try to do that in the traditional markets. Try to get hundreds of % return in the real market. Or not the real market, the legacy market, I'm sorry.
And it's an incredibly entitled point of view that I deserve what somebody, for instance, I didn't get into Bitcoin on day one. My brother did, basically. He was mining in 2010. For me, I wasn't mining in 2010. I didn't even believe in it until like 2014. I wouldn't even look at it. It didn't even make any sense to me. So can I say, oh man, I got to make all that ground up. I deserve that. I don't deserve shit. It didn't make sense to me. I wasn't willing to risk back in 2010. I wasn't really willing to risk until like 2016, if we're being honest. I don't deserve anything before I was willing to risk. I don't just get all the gains that everybody else got because I'm late to the party. I don't deserve it. And that's another thing. Don't try to rationalize bad behavior under some weird feeling that you deserve something. None of us deserve anything unless we go get it. You don't deserve the same gains that people made when they were willing to take risks that you weren't willing to make. I wasn't willing to invest early. I don't deserve that. How many people do you hear? Oh man, someone told me about Bitcoin. I should have done this. I should have done that. Hell no, you shouldn't have done shit because you didn't do it. If you should have done it, you would have done it. That's like saying, oh, I should have picked all 8 numbers in the lottery correctly. That's nonsense. Oh, I should have picked the lottery. Yeah, you're right. You should have guessed the lottery. So I hope that people take this as like, it's not a tongue lashing. It's a wake up call. Quit thinking you missed it. Just look at your dollar currency units right now and say, where in the world can I put them and grow them in the most efficient way? It's a balance of risk and safety and your personal, your ability to sleep at night, right? And you have to, that's a you decision. And this is why, when I killed that video yesterday, because I cussed profusely, people were like, I actually had people say, hey, what were the stocks you told me to get? I said, whoa. First, I didn't tell you to get shit. I don't tell anybody to get anything. You've got to purchase the assets or not based on your risk appetite. And you're only competing with yourself. So how would you sum that up, Jerry? My version of it's circuitous with a lot of profanity. Your version is probably cleaner.
Number one, everything starts with acceptance, right? You got to accept that you are where you are in this particular time and space, right? We all have different capital flows, the ability to invest X of our income to produce prosperity in the future. How much of that are we dealing with is investment? How much of that is going to knock out debt that we might have brought to the party? Everybody is different. And I think everything starts with acceptance, right? We accept that this is where we are today, right? I can't measure my portfolio to Nick's portfolio. I just can't. It would be silly for me to do that. However, starting from today going forward, I can bounce things off of Nick, use Nick's portfolio and look at mine and kind of track performance and talk about, the positive qualities and the things that you're looking at going forward. And am I using those same kind of measuring tools to measure my performance, that type of stuff. But to like try to keep up with the Joneses in this market, it doesn't take very long. Like the people that are coming here today, right? The people that come here 2 years from now are going to go, oh man, you were buying Bitcoin at $30,000 and da-da-da. I can't get in under $1 million or whatever the deal is.
And then they'll say you were lucky.
Oh, you were so lucky.
You were so lucky.
On that one particular day, you happened to just be on YouTube and this Nick Black dude popped up on the screen and you liked the theme song. So you hung out for 5 minutes and next thing you know, your eyeball, deep into friggin' theta. And now theta is, everywhere and you're a millionaire.
It's kind of funny. I get accused of being lucky. I just kind of like laugh at it. They're like, man, you're lucky you got into crypto early. I'm like, lucky? If you looked at the inner walls of my stomach, there's more ulcer than stomach.
There's more ulcer than stomach.
It's just one big I'm just an ulcer. No, I'm not. I actually have good stomach lining. But, this is not an easy space. And that's why I frequently tell people, they're like, should I get into crypto? Nope. What? But you're into crypto. Yeah. But you didn't ask me if I was into crypto. You asked if you should get into crypto. Nope. Because if you have to ask someone, should I get into crypto? The answer is no. You should not get into crypto. You will invest in things in your life or you won't. That's on you. You can't leverage other people. Quit waiting for someone to tell you what to do. What happens when that someone is gone? Then what are you going to do? Go ask someone else. What happens when you ask someone like Brad Garlinghouse? Uh-oh. All right.
Let's end it on this note. And I think this is a really great place to be, because I get this question a lot. What are good investments in this marketplace going on right now? And my answer is always the very best investment any of us can make is in our own education. So start educating yourself, not just on the crypto space, because that's just a fragment of what's going on. Understand money, understand economies, understand what drives those things. And when you understand those things and you see projects in this digital asset space that either create more efficiencies, right, or broader aspects and allow networks, that could reach more people, creating more value, those are the projects you should invest in. Not once did I mention a ticker symbol.
Right. Invest what your risk appetite is willing to absorb. So, okay, let's talk a little bit before we get into the crux of this, because we're going to go into a kind of an interesting discussion that I think not a lot of people really know where they fall until you dig. You don't really know where you fall in the discussion, because there's the first glance knee-jerk reaction, and then there's the maybe there's more to consider reaction. So we're going to talk about that, and it's just part of going through your own game theory and your own kind of cognitive bias. That'll be fun. Let's look at Los Mercados right now on the ProCoinTelegraph.com dashboard. There's not really anything close to investing. You notice Perlin yesterday, PERL was a 93. It's down to a 77. What does that mean? You don't add from here. It may still go up in price, because remember, this score is not a price-based score. Price is one of the many tiny little metrics that are all thrown in the soup of the algorithm, and it determines when would it make sense to enter or exit a position based on a variety of data, right? And it's price change, Twitter volume, trading volume, addressable market cap, insider activity, on-chain metrics, things like this. So they put all this in a soup and they give you a number. Anyway, there's nothing that's really in the buying range. So kind of cool. Anything interesting? Keep Network is doing a lot of kind of publicity. Whenever they go and do a lot of publicity, the price goes up. But you notice that even though the price is up 25%, which is great, there's a lot of Twitter volume. There's a lot of trading volume. I'm always a little bit reluctant when the thing that's moving the price is simply because there's a lot of Twitter mentions. That to me is kind of like, I'm a little queasy on that, bro. And then it's like, okay, is this a pump? Is this value? I don't, so again, another reason why I do like to look back. Don't just chase price. Don't just chase green candlesticks. You really have to dig in and understand what you're buying. There is a new asset that I'm looking at right now. I'm not going to say anything yet because I don't want to send people down some path until I can really wrap my mind around if there's value there. But we'll talk about it for sure next week. But I'm not, even though it price-wise looks good, it looks good for a lot of reasons, but it's not enough yet. I'm still not ready to pull the trigger. Is there anything, Jerry, that you're starting to look at that you're not ready to pull the trigger on, but you're like, this is starting to be maybe in the radar?
Geez, I'd say 90% of the projects that are coming to the Cardano ecosystem would fall into that category. There was a question from Jim who asked me if I got into the World Mobile token. No, I haven't. I have not. I'm still waiting to see. And I'll tell you what, one of the things that I'm kind of doing, I don't have like cash flow, right? I don't have a business per se. I don't have an income per se. I'm really interested in projects that will allow me to stake my Cardano to a staking pool and receive their token in return. This ISO model. So as many Cardano projects that come with that model, I will divert some coinage to them. It's no skin out of, I just lose a little yield. I don't lose any of my existing Cardano. And as a way for me to gain exposure on a dollar cost average basis type of thing, that seems to me very rational versus new money.
I think
right?
that's a really safe way to kind of quasi invest in new projects. Mm-hmm. Invest with your stake, because you'll end up with tokens, hopefully, and maybe those tokens will be dust, but maybe they won't be. And so, but it's no money out of your back pocket. You're not losing any principal to do it.
Correct.
So I think
forego some yield, right? You forego some yield on a speculative upside.
Mm-hmm. So I think that's a good way to do it. I'll just real quick about World Mobile Token. Cool project. Awful token distribution. Very suspicious token distribution. I mean, beyond suspicious. It looks like between 60 and about 68% of the tokens sit among friends, right? The founders get their 19 and change percent, and the early validators get their percent, which is like huge.
The founders, by the way, they're the founders. Same
guys, same people. And when you do the math, at a minimum, about 60%, 60+%. I'm being generous because I'm not counting a couple of the other things. 60% of the tokens sit with this group. And then they're only releasing a small amount of tokens. I think 20% of the total float. The rest of the tokens, play out over 20 years or something like that. And when I went through document after document after document, I was like, this looks a lot like the scammy SAFT launches where they're basically saying, we are definitely robbing the market of money. Would you choose to participate? Now, that doesn't mean that the project won't do well. It doesn't mean that the project won't make you currency units. You can't participate if you're a U.S. citizen. So you'd have to go through some offshore venture, VPN, Proton Mail, the usual. And so you can get it if you want. But man, do all signs point to scammy bullshit to me.
It doesn't matter what project you're talking about. One of the things that I love this about the Crypto and Coffee Show is you always need to look at the team, the token distribution, which we call token economics, right? The tokenomics of a project. Who are the partnerships? How is it deployed, etc., right? And when you look at the team, it's a bunch of folks that kind of they're kind of nobodies, which is okay. You don't have to be a somebody. But then you look at the tokenomics and it's like, wait a second. This isn't right. Especially with a project that's entire mission is to distribute power, right? So if in the tokenomic structure, all the power sits with 18 guys, 12 guys, that's a philosophy conflict, in my opinion.
A philosophy red flag, a PRF.
It was PRF all the way, baby. So yeah, I'm skeptical on that basis alone. We'll see.
Now, that also doesn't mean that this thing doesn't go from 1 cent to, $200 or whatever. But typically, fish stinks from the head. So if you can look at these things and in the beginning they look sketch, you should not be surprised if something sketchy happens. It was funny. Todd brings up a good point. Speaking of Pump, did you see the Mark Cuban opposite Midas Touch with Iron Finance? Mark Cuban's a dummy, right? You guys get that by now. Do not do anything Mark Cuban does in the investment space. Almost run opposite. I'm actually really happy that he's not a proponent of Bitcoin. It would bother me if the argument made sense to him because he's such an idiot. This is a dude that sold a dumb company to a dumber company 20 plus years ago and has made zero return on investment. Fucking zero in 20 years. He's a billionaire. Awesome. Good for you. High five, bro. He hasn't even paced inflation. The admitted inflation. This is not a guy you get your marching orders off of. So of course he invested in a big project that was a rug pull. Of course. What else would you possibly expect? This guy is a perennial douche. Anyway, Just thought I'd throw that out there. Okay, so I think we can reduce all of that to there's nothing in our direct, I got to buy it now radar, but there's a lot of things that we're constantly looking at. So that's healthy. And you look until you lose sleep because maybe you're thinking, crap, I need to own this, right? Like in the beginning, we lost sleep because we had too much Bitcoin. Now we lose sleep because we don't have enough, or at least we think we don't have enough. So you just got to be very careful. Good to see you, Liquid Smoke, Garth, Expat, Matt, Tom, Jarrett, good to see you. Let's see, BP Brother, What HK, Gordon, Hootie, JD SGC, Scott, Fat Sea Turtle. I've always liked that one. Fat Sea Turtle. DJ Wyatt, Joe Pirate. Cool. I think we got the whole team. Okay. So let's move on a little bit. Let's just a brief look at markets. There's nothing super exciting. The Bitcoin, 39K, still pretty good. Ethereum 2420, Cardano sitting at about $1.50, Polkadot 23.5. Any mentionables? Theta starting to melt up a little bit.
You don't have on your radar that I have on my radar, a decent holding in it. Quant, which is an interoperability play. Quant, QNT. It's had a nice run the last couple of days.
Yeah, there's a lot of these. I've had a lot of people hitting me up on Twitter, which
great management team for Quant and excellent tokenomics.
You mean they don't have 60% of the tokens in their back pocket?
Like 5%.
See, that's fair. I'm all for that. Listen, if you're developing a platform
and the management team, oh my God. For what they're trying to apply this technology to, they've got the perfect management team and founders for the application that they're going after.
Is it a protocol layer?
No. It sits on top of various protocols.
So it's like a 1.5.
Picture this. Picture a very sophisticated API play.
Okay. So they could be looked at in the same realm with like Graph Token.
Or Matic.
Okay, so they help a layer one present their opportunity or their proposed opportunity to dApps, builders of dApps, developers that might build products on top of them.
And cross-chain, correct.
And cross-chain interoperability. So that's cool. I mean, listen, anything that's good for the space, good for the space. I had a lot of people trying to plug a Versus coin or something like that. And I was like, they're like, read the white paper. It's gonna be a top 10. It's gonna be this. It's gonna be. I'm like, I don't think anything's gonna be anything. But I went ahead and looked at it. I read the white paper. The guy that runs the program is an incredible douchebag. That's always a little bit troubling to me. And so I'm like, ugh. So he's kind of uncomfortable. The project doesn't look like anything dramatic. It's just more features. It's another protocol layer with more features. But I realized I didn't wake up yesterday saying, you know what we need is yet another layer one with more features. I feel like we don't have enough features. It's like at a certain point, maybe you're in a crowded space. I think there's a lot of layer one solutions right now. But I think if we're all being honest, it's Ethereum, Polkadot, Cardano, Algo, maybe Tezos, maybe, and then everyone else. And I'm not even a super big fan of Tezos. They started out scamming. So, man, we're getting the bells of death. So anyway,
I could have muted that. I apologize.
No, that's fine. No, we love it. We love the bells. We love the sounds.
The whole reason any of us, I mean, I'll just speak for myself. The only reason why I have investments in what you would call also ran layer one protocols is the truth of the matter is I am not smart enough to know who is going to launch the dApp that's going to reach 1 billion people. And it could be on a Tezos. It could be on a Near. It could be on an Algo or Atom or Neo. I don't know. You know what I mean? And so when you look at these kind of things, China, big, huge population, right? Already digitally savvy, right? Well, some of those layer ones out of China, the Neos, et cetera, it might not be a bad idea to have a little exposure to a couple of those guys, because all it takes is a dApp that reaches 1 billion of them. And now all of a sudden, you've got a stranglehold on that use case. I'm using 1 billion people as kind of the benchmark of it's most likely not going to fail. What do you think? Yeah. Is that where do you look at?
I mean, I kind of say that I think we're getting into, like you talked about with QNT, the idea of interoperability. And so the way I see the near-term future is these companies aren't going to pick one platform to launch on. They're going to launch an ERC20 or an ERC20 converted version of their value proposition. They're going to launch an ADA version, a Polkadot version, an Algo version. Why wouldn't you launch everywhere? Why wouldn't you have interoperability? And most of that will coalesce in these top kind of layer one assets. And so I just think to myself, there's a point where you're crowded out at the bottom. And I don't know if, there's Apple with their iOS, there's Android, with their kind of Android operating system. There's not 14 of them.
No,
and
you're
almost
right.
And everybody on earth has a phone. So is there space for 14 different operating systems? Probably not. But what do? You leverage Android, you leverage iOS, and maybe there's still like 6 people that have like, these weird Linux-based offshoot. Their phones are all kind of jailbroken, all that. But there's not fucking 14. And so, how many FANG stocks are there? 6? You could argue 7. There's not 14.
Right.
So I guess that's my mind goes, I just feel like power will coalesce at the top. And I may miss a few of these little smaller assets doing that, but I think the big story is with the bigger assets, and it's kind of like the market has spoken. So unless you do something incredibly groundbreaking, like a layer one in the AI space, like a Fetch, which seems to be just having a new partner every freaking day, or like an AGI, which has the Singularity DAO, which is kind of launching against it, which that whole thing, if you haven't looked at what Singularity DAO token and their liquidity mining and what that's going to look like with these kind of autonomous actors and stuff, it's wicked. That's where I still lose sleep. I still feel like I don't have an AI. It's not represented enough in my portfolio. That's the thing that makes me kind of, I'm like, I need more money. But I don't, I mean, we all need more money, right? But that's the thing that I'm losing sleep over. I feel like I'm getting left behind, and I feel like there's going to be a point where those things go and I can never catch them. That's where I think I'm going to look back and go, I wish I would have. So since I'm future wish I would have-ing to back to now. And so I'm like, if I future wish I would have back to right now, then I need to, then I should. And so that's where all my new currency units are going, just into AI right now. And then there's one other token I'm looking at, but again, we'll talk about next week. Okay, let's get into the crux of our conversation. So let me just throw a couple articles for context. Oh, and real quick, let me just point out that what Jerry and I are about to talk about, these are just our opinions, man.
Yeah, well, that's just like your opinion, man.
So don't get your panties all bound up. And that's, men wear panties too. Grandparents wear panties. Theirs are made of plastic and they hold, a gallon of feces, but we all wear panties. And if we don't, we should. Don't go pantyless, you creep. Have some decency. Okay, so we're going to talk a little bit about what's going on at Microstrategy, Michael Saylor. There's a bunch of articles. For those of you that don't know, basically, Michael Saylor, CEO of Microstrategy, which real quick for everyone, Microstrategy is not an investment bank. It's not an investment company. It's not a hedge fund. It's not a pension fund. It's not a wealth manager. They do data analytics, business intelligence. They have a cloud-based system that propagates that out. They're not even a blockchain play themselves. Okay. But he's a very forward thinker. He's an incredibly intelligent guy. Michael Saylor is no dummy. So let us not confuse the things that he's doing and our opinions on those things for the fact that we think he's stupid. This is not a stupid guy. This is an incredibly intelligent guy. But sometimes we might say that incredibly intelligent person is doing things that might be flawed. At least that's my opinion. So we're going to talk about first what he's doing. First, they went to raise $400 million to buy more Bitcoin. Okay, how are they going to get that? They were going to sell some debt, some corporate debt. So he has a company that does this one thing that has nothing to do with crypto in any way, shape, or form. They don't even provide crypto business intelligence and analytics. They don't even do that. They have zero connection to crypto, except that Michael Saylor loves it. So on their balance sheet, months back, and Jerry, you said, well, when was their first introduction was August?
The purchases started in August.
Okay.
It was November they did a debt raise.
Okay.
Then again in March they did a debt raise.
Okay.
Each subsequently larger.
Okay.
They've just done and completed another debt raise. And now and each of those debt raises, by the way, was oversubscribed. In other words, more people wanted to get in on the deal than was available, which tells you something about the debt market. But anyway, I digress. Right. Now what they're talking about is actually issuing more common stock, diluting every other stock in existence to raise more money for Bitcoin. That's what this article is about.
So, right. So what the recent deal is, and listen, it's been a good trade. Basically, as a company, they decided, are we going to hold cash on our balance sheet or could we hold some Bitcoin? Does it make more sense? Sure. That makes perfect sense, right? I get it. And I'm all for it. And the board agreed and it got done. Awesome. But it's gone past that. And so now they went out, they were looking for 400 million. They said, bump it up, 500 million. Then apparently there was a lot of people that want in on that. So they said, bump it up to $1 billion. I think they're paying 6.25% on that. So basically
the most recent one.
Right.
The first one was 3.
Mm-hmm.
The second one was 4. This one's 6.5.
Right. So this is junk. Just so everyone knows, this is junk debt. It's junk bond debt. Okay. It's less than triple B, right? Meaning pensions can't take this on, wealth management facilities of a certain size, state-run anything can't touch this. There's a lot of rules about what you can and can't buy, and most of these kind of organized investment facilities can't own junk debt, which is lower than triple B. Triple B is the last rung of investment-grade debt. So, and just real quick, following massive BTC purchase announcement, Microstrategy says it may sell up to $1 billion in stock. The firm said it intended to use the proceeds from the offering for general corporate purposes, including the acquisition of Bitcoin. That to me is where the trouble starts, because I don't think this is general corporate purposes, because in my opinion, this isn't part of their business model. So the same day, business intelligence firm Microstrategy announced it would use $488 million from the proceeds of a private offering sale to buy Bitcoin. The company said it may also sell up to $1 billion of its stock for the same reason. In a Monday S3 filings a few days ago, the SEC, Microstrategy said it would be launching an at-the-market securities offering, which would allow it to sell up to $1 billion of Class A common shares, thus diluting the rest of the shareholders. The firm said it intended to use the proceeds from the offering for general corporate purposes, including the acquisition of Bitcoin. You can probably read that to mean 100% Bitcoin. Doesn't mean he'll buy on the open market. He could buy through puts. There's all sorts of ways they could structure it. But he's basically telling people, if you buy these shares or if you own MicroStrategy share, you know what you're getting. Bitcoin does not pay interest or other returns, and so ability to generate a return on investment from the net proceeds of this offering will depend on whether there is appreciation in the value of Bitcoin following our purchase of Bitcoin with the net proceeds from this offering. Future fluctuations in Bitcoin trading prices may result in our converting Bitcoin purchased with the net proceeds from this offering into cash with a value substantially below the net proceeds from this offering. What does that mean to you, Jerry?
It means to me that they have a tremendous conviction that Bitcoin will have an accretive run. I mean, they're banking on it.
They're banking big.
What they're doing is they're leveraging the forward prosperity of their company on it.
We talked the other day about leveraging the future, about essentially stealth debasement. And it looks a lot like borrowing from the future with the assumption that things go up. Now, I believe that based on the macroeconomic landscape we all live in, that Bitcoin is going to go up. I think it's going to go up in way high. Like, I don't think it's out of the realm of possibility to believe that in 2029, 2030, based on a variety of factors that would all have to fall into place, you could see a $10 million Bitcoin. I don't think it's crazy to think you could see $1 million Bitcoin in the next couple of years with a little bit of market chaos. If there's a shock in faith in the equity space, you could see a panic into assets like Bitcoin. Paul Tudor Jones just said he's going 5% gold, 5% Bitcoin. That's not nothing. This is a dude. Paul Tudor Jones knows his shit, bro. This is not like a dude. This is a gentleman in the study of markets. This is not Mark fucking Cuban. All right. And so when someone like that says, and again, I don't completely agree with his argument, that his argument is all about inflation. And I think that's the wrong kind of argument. But I think he's saying the same thing we're saying. We all know this stealth debasement, this robbing from future prosperity on the assumption that markets only go straight up is flawed thinking. It's central planning mentality. It's I got to get reelected mentality. It's look at the carrot, forget about, screw the grandkids, I'm cold now type, very narrow thinking. And that usually ends in chaos. But it's still gambling to an extent, because if you're saying that the markets can't go up forever, well, logically that makes sense, but you're still gambling. And so let me continue with this article, and we're just laying down kind of a backdrop for why he is or isn't doing this and whether this makes sense. And when you go from being an investor to being a fiduciary for a company, which hat are you wearing? To being a bit of a gambler, to being a huge gambler, to being a compulsive gambler. So bullish all the way. Microstrategy doubles down on its Bitcoin bet. Microstrategy's latest offering seeks to deliver a yield of 6.25 to 6.5%, significantly higher than the average junk bond of 4.1. Not just significantly higher, more than 50% higher. But there's a reason junk bond debt, high yield, pays what it pays, because high yield equals high risk. There's a reason this stuff is called junk. Okay. There's never been a dull day when it comes to cryptos, as well exemplified when the digital asset market dipped around 50%, eventually taking the total capitalization from its high of 2.5 trillion to around 1.7 trillion. As was expected in the wake of its turbulence, Michael Saylor-led business intelligence firm Microstrategy, listen, business intelligence firm, not investment facility, not hedge fund, business intelligence firm. Microstrategy announced that it was set to buy the dip, successfully concluding its $500 million offering of secured notes. So remember, this is selling debt, taking the currency that you grabbed. They grabbed about $488 million after fees. They took that money. This is no different from Apple selling their shares. Selling debt to buy shares, to jack the price up of the shares. You see where this becomes this really weird, creepy kind of circular thing. Okay, to further elaborate on the matter, per a statement released by the company, it was revealed that MicroStrategy had been able to facilitate a sale of $500 million worth of senior secured notes. By the way, if you own MicroStrategy shares, equity, you're at the very bottom of the capital stack. People need to understand this. If this company was to go sideways or get bankrupted or whatever, and there's a bunch of ways it could happen, even with Bitcoin being successful. Bitcoin could trade sideways, and this company could get pummeled in a variety of other ways that might even have to do with its actual business that could send this thing into insolvency. Senior secured note holders, senior debt holders, convertible debt, things like that, they're at the top of the capital stack, meaning they get paid back. You as an equity holder do not get paid back.
Well, you're the last in the line.
Statistically, yes. Technically, yes. If you look at the insolvencies, equity holders normally don't get dick, or they get dicked.
They get a write-off.
Yeah, you get a tax break. I invested all my money for a tax break. Awesome. So to quickly recap MicroStrategy's recent crypto purchasing efforts, it should be highlighted that since August of last year, a time when the firm bought 250 million worth of Bitcoin, the company has been on a Bitcoin buying frenzy, as highlighted by the fact that the firm holds 92,079 Bitcoin, which works out to nearly $3.8 billion. They are also now the largest private company holder of Bitcoin. That's kind of cool. Dangerous, but cool. Lastly, it bears mentioning that if Bitcoin's value continues to hover around the 40,000 zone, MicroStrategy will most likely be able to add around 11,900, so call it 12,000 Bitcoin to its balance sheet, bringing the company's total hold to over 4.2 billion. MicroStrategy's move, smart or not? And then we're going to engage in this kind of discussion. On June 7th, MicroStrategy announced the launch of the aforementioned private offering, initially stating it was looking to raise 400 million aggregate principal amount. However, as highlighted previously, this number now stands close to 500 million. What's more, following the announcement, Michael Saylor claimed his company had already received 1.6 worth of orders for their latest offering. Well, it makes sense, right? If he's wrong and the company dumps, you got your write-off. These people that are buying this debt would be in the front of the capital stack at the very top, most likely to get repaid with assets from the other side of his balance sheet. Caden Stadelman, chief CTO of Komodo, a blockchain solutions provider, told Cointelegraph that his move isn't that surprising, especially when considering that its newly formed subsidiary, Microstrategy, already owns a lot of BTC. Michael Saylor is clearly focused on a long-term investment strategy rather than short-term gains or losses. Putting company debt on the line is risky, but it could obviously lead to a massive return as well. To me, this feels a lot like gambling. One final quote, MicroStrategy appears to be seeing a very promising future in Bitcoin that no one else is seeing. I don't know if no one else is seeing it. While these moves may not in themselves move the price of Bitcoin, MicroStrategy will be one of the biggest beneficiaries when prices get to trade above previous all-time highs. Yeah, that's true. If it works out, it worked out. So the question I say, Jerry, when does this become gambling, and when is this outside maybe the realm of what a fiduciary should do? So let's talk about this. Jerry, as an investor, what do you think of Michael Saylor?
Brilliant. And that's the totality of what I know about Michael Saylor. I'm going all the way back to 24-year-old kid, works out a deal with Dow, right? Dow Chemical. Launches his own company, right? Structures it. When he goes public, the structure of the way they did the public company, he retains a butt ton of his actual shares, giving him control, right? Going through all the crap that he's gone through, right? Never being the biggest business intelligence software provider on the planet, but staying consistent. They've been in business for over 26 years, right? And if you know anything about Michael Saylor outside of MicroStrategy and read his book, The Mobile Wave, the guy is brilliant. And the way he looks at things from an engineer's lens, you know, using principles like thermodynamics, understanding the laws of nature. You know, I mean, he's a brilliant dude. Brilliant friggin' dude.
So I think we can agree, Michael Saylor as an investor and as a we'll call him a thought leader. He's got a lot of people that really pay attention to him now, is on the money more than he's not, right?
Yes.
By the way, for the record, this is a guy that did not believe in Bitcoin. This is a guy that looked at it with all this tech savvy, and he did not arrive at the same conclusion we did. Now, I'm not saying that other than to point out that, one, I think it's incredibly cool that he changed direction, as so many, as the Dalios, and there's a lot of people with a lot of brain box that have changed course. Tudor Jones, Druckenmiller, go down the list. Nouriel Roubini even, right? So it's okay that you didn't like something and now you do. I don't have a problem with that. It also highlights the fact that even smart people miss things that seem like they're right in front of them, right?
Well, you would think, right? This is a guy that learned and understood early on the concept of scarcity right? And that what the internet did was create an entire world in cyberspace, right? And put together that domain names were unique pieces of property in cyberspace. And if cyberspace was going to grow and become popular, owning these unique special things in cyberspace, i.e. domain names, was pretty smart.
Yeah, he gets it.
He does. He totally gets it.
Which is then why you go, well, why did it take him so long to get Bitcoin? Who knows? Could be
maybe
a variety
he was doing other things.
Right. So like getting his company up and running and
designing yachts.
And returning value to his shareholders. So now let's step away from him as an investor, him as a thought leader. As a fiduciary, let's say you own Microstrategy stock and you hear about this news. If you're a Bitcoin fan, you go, okay, that's cool, but I own Bitcoin. But if you're not a Bitcoin fan, what do you think? Do you think this is kosher?
Let's actually walk through this. Okay, so Microstrategies is considering a new treasury strategy. This is March of last year, right? March of 2020. Okay, great. Well, you get the board, you get all of the external auditors, all these people that are in and connected to your business. They get on board buy-in. Then you take it to the shareholders, right? You take it to the shareholders. We're going. You guys want to come with us? They give them an option. Those that don't want to come with us, get bought out. And those that want to come, they come. So right then and there, back in the from step one, they weeded out all the people, right? That would be the contrary voice or the contrarian side of this movement.
You know, you're explaining the Spanish Inquisition, right?
No, it's real simple. You said the shareholders. What are the shareholders? If I was a shareholder of MicroStrategy and I was against Bitcoin, I most likely would have got weeded out a long time ago. I would have left.
Right. So
now all they got are people that are bought into that. So what it's you've got a prophet, right? Preaching to an already biased community, compliant community. You're not going to get a lot of pushback unless it's flawed thinking. And I don't think it's flawed thinking.
But wait, we're simply talking about taking on Bitcoin as a treasury function right now.
Correct.
Right.
Correct.
Right. We're not talking about issuing debt. We're just saying as a treasury function.
No. As we are going to have a treasury strategy where our cash flows that come in that are beyond our operating needs are going to be swept into this asset.
Right.
Everybody bought in, and those that didn't buy in left.
Okay.
Now let's get 4 months into the process. We have an opportunity to address the debt markets, where we're going to forward finance the cash flows that we can project going forward to raise money today. And we're going to use that money to fortify a treasury position, not a research and development department, we're going to open up our own MicroStrategy cloud. So we're going to need X amount of millions of dollars for servers, and we're going to kick AWS's at. No. We're going to continue to add to our treasury strategy, not our P&L. That is where you start going away from how much of this company is about its treasury strategy versus its P&L strategy.
And
I think that's your contention.
Well, and
from a fiduciary standpoint, I don't hold that same position.
To add to what you're saying, for people that don't understand, the way they come up with these numbers is they do a discounted cash flow model, which is complete, utter bullshit. It's alchemy. It's basically what Enron did, but skirting the law. And they say, well, this is where we're going to be, bro. And we'll just, and we'll take these little things out and look how much money we're going to make with that factory we haven't built yet on that land we don't own yet, but we're going to get it. We're going to build the factory. We're going to sell all these widgets. So based on that.
So we want you to value that. We want you to value us at that today.
Right. So they're using that to sell some debt, right? They're also now using that to water down or dilute the shareholders. And this is my problem. Once you left the treasury, I was okay up to the treasury function of having some Bitcoin to take place of some cash that would just be sitting as dead money, eroding to the basement. Fine, cool. But the minute they took the next step, the minute they said, let's go sell some debt, let's go dilute the remaining shareholders to take on more cash, to buy Bitcoin. He was even quoted as saying, if you want to judge MicroStrategy, judge it based on our cloud-based subscriptions and the price of Bitcoin.
Right.
That's where I said, whoa. And I said, well, let's look into, behaviors of gamblers. Should money be loaned or given in these circumstances? Statistically, what do experts say that study human psychology and gambling behavior and all that? Well, should money be loaned in these circumstances? Experts say no. This may sound uncaring, but really the only thing you can do so that the gambler will experience the consequences. The problem is he's not experiencing the consequences because this is not his money. This is debt and investor money. Everyone else is taking, this is OPM. And he said, well, if you don't,
he's 100% exposed to the upside, not the downside.
Right. He gets to win. He just doesn't have to lose. Well, Jerry, can I borrow 100 G's from you?
If you need it, sure.
Can I borrow it with a 6.25% return? Matter of fact, can you just give me your Bitcoin, 100K worth of Bitcoin, and I'll give you 6.25% on it?
Sure.
Now listen, if Bitcoin goes down, I'm not going to be able to give you back the money.
Now,
but if it goes up, we win, bro. It's my new business. I sell staplers and Bitcoin. Like, what? I like staplers. I like Bitcoin, but together, I don't know. And so that's where I'm having a problem with it. And so, I start to look, I go, okay.
I don't. And the reason I don't is this. You've got an entire market, this debt market out there with literally trillions of dollars looking for a place to be. That is
which shouldn't be
mandate. Well, I'm not saying it should I'm saying I'm a realist. It is there. Whether it should or shouldn't be there is irrelevant. It is there. That's what's relevant. All right. So you've got that. You've got a market, right? You've got a market. Now, all of these people that are bringing this money to this market understand this market far better than you and I do.
I'm not so sure.
Well, I kind of am, just because you and I are not running billions upon billions of dollars in the debt market every day. We're not.
We're certainly not as smart as guys like Barry Madoff, Bernard Ebbers, Jeffrey Skilling. It's true.
I'm not saying smarter than those guys, but I'm talking about guys that, anyway, it doesn't. The point is they're well aware of what they're doing. This is not like they're shilling they're not doing a Mark Cuban. They're not shilling some bullshit to people, and who are going to get the rug pulled out from underneath them. You understand? They're very aware.
But let's dig into this. I'm not sure they're completely aware, and I'll tell you why. You believe in Bitcoin enough to buy into. Would you buy MicroStrategy shares right now?
No.
Why?
Because I can buy Bitcoin right now.
Okay. Do you expect to make more off Bitcoin than the 6.25% by buying his senior debt?
Absolutely.
Okay. And Jerry, but
it's not, all things are not created equal. There are funds that are investing in this corporate debt.
Right.
That in their mandate, they don't have the ability the fund doesn't have ability to buy Bitcoin directly. Maybe members in the fund in their own personal trading accounts.
It's junk debt.
Right.
So meaning they either can buy junk debt directly because they're buying junk debt, or they can buy through GBTC. So
maybe they can't. You don't know the mandate of every single debt entity that's buying this stuff. We don't know these things.
Okay, so if that's the case, follow your logic. The people that are buying into this are people that have no way to get exposure to Bitcoin.
that particular fund, not people. Let's be real. Let's be super clear about this. These are not people as individuals like you and I are individuals. These are funds that have very strict mandates of allocation.
Well, not that strict if they're buying junk debt.
Well, maybe there are plenty of funds that are set up just to invest in junk debt. That's all they do is find junk debt.
So carry that to its logical conclusion. You've got junk debt buyers, and he's servicing a junk debt market.
Right. So what do I do? If my mandate is buy debt in the junk sector, right? This little over $1 trillion bond market. If my mandate is to only invest in junk bonds, and I'm looking at this junk bond versus this junk bond, right? This one offers this one offers this in percentages. This one is got a Bitcoin backing. This one doesn't. This one's based off of the whole valuation of the company is we've issued debt to buy back more stocks. The CEO and the management team got rich, but the company has no R&D, nothing behind it. It could fail faster than the one with Bitcoin. If my mandate was I had to buy a junk bond, I would invest my money in the Bitcoin-backed junk bond before any other junk bond. That's me personally.
So what we have is a quasi-compulsive gambler who's gone to a bunch of funds that are, by definition, all compulsive gamblers.
Yes.
That invest in the shittiest garbage on the planet.
Because of the highest returns on the planet.
So he's borrowing. So a compulsive gambler is borrowing from compulsive gamblers to gamble on the balance sheet of a company that has nothing to do with Bitcoin, digital assets, distributed ledgers, or anything in the fucking space.
It's brilliant. It's fucking brilliant. I love it. Oh, that cuts.
Don't worry. We won't cut it. I mean, we will cut it.
Brilliant. Nick. Okay. So he's doing it with a team. This is not Michael Saylor individually acting. There's a whole board. There's a whole executive team that by definition of the corporate structure has to sign off on this shit. He might be leading the charge and carrying the flag and all that's wonderful. But every single one of those people have to sign off on it before it could actually come to fruition. So that's one thing. It's a team of people that have the same conviction or damn close. And I applaud that. Ask yourself this question. If the way the current world is set up, and you actually have conviction that the appreciation rate of the asset you want to acquire funds to acquire, right? Acquire funds to acquire is greater than the cost of that capital, then isn't that a rational move?
No, not if that's not your business purview. Not if that's the reason for the business.
See, why are you conflating a treasury function with a business operating
because
P&L type of strategy?
This isn't treasury function anymore. No. We're way past treasury function. We're taking on debt and diluting shareholders of Microstrategy. It's not a hedge fund. He's not an investment man.
With the recent move of the adding a billion shares.
Yeah.
Okay.
I'm okay with it.
I could probably agree with you on that. But
I'm okay with the treasury.
Issuance of the corporate debt, to me, is no different than you and I. Okay, you own that beautiful condo in Sherman Oaks, and you're in this space doing what you do, and you think to yourself, the cost to carry now you own this condo free and clear, right? Your grandmother gave it to you or something.
Right.
You got no debt on it. It's got an appraisal value of X, and you go, I'm gonna take a 50% mortgage on this thing. I'm gonna borrow 50% of the value on this thing. No, or better yet, I'm gonna take the max. I'm gonna go 80% of the value on this thing at X% over 30 years. You have, it's no longer a variable. It is a known cost of capital structure for X period of time.
I'm going
to get this money. I'm going to get this amount of capital that I'm in this digital asset space. I'm going to deploy it into Bitcoin.
Okay,
because
that's
I
fine.
honestly believe that the cost of appreciation, the accretive value of the asset, is going to far outweigh the cost of capital to finance this acquisition.
As an investor, you have every right to do that. But if my business is as a real estate manager for a bunch of other people that have invested money in my real estate company, I have no right to do that. And let me just add this. If this same move happened 6 weeks ago, Microstrategies is fucking bankrupt. At 65,000, if he had pulled this shit, that company is done. No longer fucking exists. Everybody gets liquidated to fucking zero.
Well, can we give him some credit that maybe they had a strategy that said if we get blank, we'll execute plan A, but we won't until maybe this was on the books as something to consider when it was at 64 grand and they went, you know what? Let's wait till we get an X correction in X to execute Y. And it hit that number.
Right. But
it hit 30 grand and they went, you know what? This would be a good time to do it.
You're finding ways to justify using some kind of mythicism. That's not rational, Jerry. It's not rational saying maybe they planned it all along. They didn't plan it all along because they didn't plan it all along. He said this was a new idea to capitalize on the price drop. But what if this same guy, if he thinks it's going to $1 million, how do we know that it was one boardroom meeting away from doing the same thing at 65 by telling everyone in his compliant team, listen, we're going to 120K this year. We're going to 300,000 this year.
I try not to live in the heat. It's that.
But you just did.
I don't.
You just did the exact same thing the other way. You just said, well, how do we know this wasn't his plan?
You just turned it around to make it sound like that. I have got a rational thought process.
That's not rational.
And you are bringing in your anti-gambling. I hate gamblers. Gamblers are the worst. They're the dirty, scuzzy little bat. You know what I think it is? I think somebody borrowed $10 from you to play poker one night and they never paid you back, and you've never forgiven them for it.
You know who you are, Ted.
No, I think there's a rationale to this. And the crux here, is right here on this fine point. And that is, does the cost of capital get completely blown out of the water with a accretive cost of appreciation? And when you factor in those two factors, see, all the debt stuff is locked in stone, right? X%, X amount of years it's super final. They know exactly what that is. Now the only variable is the appreciation rate.
No, I'm not arguing whether it's a good investment decision. I'm arguing whether he should even be able to do it with an unrelated company that's not an investment company, that's not a hedge fund, that's not a fiduciary for capital.
Yeah, but treasuries,
it's not in their business purview. Okay,
but see, there it is. Because what do treasuries of companies do? They invest.
This is not a treasury function. No, listen, Jerry, this is no longer a treasury function.
You're saying the minute they cross the line from issuing debt to selling shares.
Yes, I'm 100% okay with everything they did up until that point, up until the new issuance of junk debt and the dilution of future shares. That's what made me go, ugh.
Okay, I will surrender. I will surrender to, I don't know everything about everything. The list of what I don't know is much larger than the list of what I do know. So I'm willing to surrender that point about the shares being issued. However, when I look at the totality of this guy's history, right? I'm kind of banking on the guy, not so much the process. That he knows what the hell he's doing. And has a tremendous amount of conviction behind it.
So would you feel the same if at Amazon, if Amazon said, we're shifting gears from now on, we're gonna double down on our shares to buy Bitcoin? Would you be cool with owning Amazon stock?
No, but I'd be very happy in the Bitcoin space.
Right, but we have to separate ourselves from being Bitcoin fans. Okay, let me point it. What if Michael Saylor?
Your thing is the fiduciary role,
that responsibility,
and who are you fiduciarying? Are you fiduciarying the Bitcoin community, or are you fiduciarying your New York Stock Exchange shareholders?
When he put the laser eyes on his Twitter account, I started going,
okay. I'm okay with being a Michael Saylor fanboy, and I'm okay with you not being. a Michael Saylor
Okay,
fanboy.
let me ask you, would we be having the same discussion if he said, I'm all in Tron?
No, you and me would both be saying, this guy's a friggin' moron.
It's no different.
But, when you listen to him discuss what he sees, he's not coming from a speculator's viewpoint. He's coming from an engineer, talks about how this was built, what it does, how it works, versus the history of the way things have worked. And so it's not like Mark Cuban, right? I get your argument against Mark Cuban. This dude is not Mark Cuban. This dude understands this technology. I mean, from a very, very, and why MicroStrategies isn't in the Bitcoin business from a P&L standpoint. Like, why aren't they doing data analytics for on-chain? Why aren't they doing that? These are all things I don't understand. You would think it would be just a natural progression that they would start to add things as the space grows, because that's what they do. Business intelligence software or cloud service or mobile service. That's what they do. That's
and real quick, expat Matt. Yes, Amazon did shift gears by adding utility. They added ancillary products and they took over online sales. What they didn't do is go from books to buying stock or buying,
or building freeways
or gambling and completely just disregard the book company, right? They used it to build something and they're still using it. This is not the same as doing a vertical or adding verticals into your business model, right? This is not that. This is your thing is this to you, Nick Black, who's a very bright and intelligent guy, but to Nick Black, the Bitcoin treasury strategy that includes the creation of new stock, etc., is not a logical next step, in your opinion. Well, remember, this part of it's not a treasury strategy. We're beyond treasury strategy. When you go out and tap the debt markets and you dilute shares,
now it's a business strategy.
It's the business strategy. He even said it in his statement. You should judge MicroStrategy by our online subscriptions and by the price of Bitcoin.
Yes.
No.
Oh.
Anyway, it's fine. We don't all have to agree.
See, I judge you by the quality of your content, and I know that you're much more than that, right?
But I'm not selling my content.
Semi-pro soccer player.
Yeah.
You train people in the martial arts and boxing. But I judge you based on your crypto content.
Right. But
even though I know that you're much more than that.
Yeah,
you're more
not
than
much
just
more.
a crypto aficionado.
Not much more, Jerry. Not much more. But also, I don't have a bunch of shareholders that have entrusted to me their currency units, and my job as a fiduciary to protect that. And then I say, we're going all in mangoes. What? Mangoes. Mangoes is the winner. Like, what are you talking about? Mangoes are going to be the fruit of the future. You're like, okay, listen, if you're in the mango community, what I'm doing is awesome. Mangoes. He sees it. He didn't like mangoes at first. He was an orange guy, but now he's all in mangoes. Okay, cool. I have a background in horticulture and fruit. I now get it. Mangoes is the future. But if you don't like mangoes and you actually like crypto and you go, what in the fuck is he doing buying mangoes with my money? That might be uncomfortable to you. And this is why it's getting dumped out of index funds faster than any other company in the last year.
He's a trailblazer, man.
Maybe.
He's blazing a trail. He's not afraid to be first. Or be the guy that gets bloody going through the door first.
Yeah. Or quasi break the law and be a degenerate gambler. Either way, either way you describe it.
He ain't afraid of the SEC.
He ain't afraid of no indictment.
He ain't afraid of no friggin' lawsuits.
And and Solid Gold has a good point. The market will ultimately decide.
Yes.
But if he's right about this, it doesn't make his decision correct. Right? If you gamble, if you take all of, let's say, okay, what about this lawyer that was stealing all the money from all these people that were supposed to get payouts, the settlement, the Aaron Brockovich guy, such a big douchebag, he stole like $100 million. If he had taken that money to Vegas and doubled it, does that make him a good lawyer? It's cool that he stole because he doubled the money with gambling. That doesn't make the decision to steal any different. Because he was right. Oh, I invested in Bitcoin, so I won on my bet. Therefore, gambling away investor money is cool if you win.
You're getting all moral and shit. I don't know. I kind of a results oriented guy. You know what I mean? Okay, did you run 10 miles or did you drive there? I don't care.
Mangoes.
How you got there? Mangoes, baby.
No, but that's the problem. We need to care how we got there. That's the problem with moral hazard.
Yeah, but moral hazard.
It's easy for us to rationalize moral hazard. And the reason that the financial economy is one of the reasons is so disparate and dislocated from the real world that we live in is because of this constant fueling of moral hazard, because tomorrow is bound to be better than today. Therefore, I'm going to borrow from tomorrow and finance today. And that's problematic, and it's endemic, and it doesn't seem like it's slowing down.
There are tools that can aid us and add value, right? And cut time for some of us. But if they present a greater harm to something outside of that small result-oriented vertical, you have to take that into account. That's why I love your thing about, trying to encourage people not to get too crazy with leverage. Because the truth of the matter is, we're in an industry that has all the appreciation you ever need if you're just willing to be patient. But we started this entire hour plus conversation off with most people are only thinking about right now, right? I only have this, but Nick has that, and I want that. How do I take the shortcut? How do I somehow condense 3-4 years of that heartache that Nick went through to only 1 week for me, and I can get right to where you are? It's unrealistic. It's not rational. So, people think that way.
Agreed. Real quick, Nick, only time will tell. No, not only time will tell. Gambling is gambling. Whether he's right or wrong doesn't change the fact that he's gambling. So it's not only time will tell. By the way, Van Gogh, if you're going to use that analogy, he died penniless with one fucking ear. So, that's probably not the best
example. Get the money, didn't get the girl, didn't get anything. However, those who held his paintings long enough.
They did great.
They did great.
And real quick, Schrodinger's investment, if you're referencing Schrodinger's wave equations, having to do with whether the cat gets shot or not, whether an electron escapes an inescapable barrier for light photons. If you're using that, no, that has to do with Schrodinger's wave equations and Heisenberg's uncertainty principle and the possibility that a photon can be at multiple locations at one time. That's not applicable here. This is a human decision to gamble. This isn't Schrodinger's wave equations played out over the sum of histories. So let's not do that. All right. Cool.
Oh, somebody scratched a nerve.
Well, no, if you're going to apply quantum physics, you got to do it correctly. We'll go down to the Planck length and we'll start from there. 10 to the negative 24th, baby. Who's riding with me? All right.
Does that mean buy Bitcoin? Does that mean buy Bitcoin today?
You got to buy Bitcoin.
Are we in a buying range?
Because of the Planck length. Yeah. Okay. Yes, I know. It's a joke. Okay. So let's go. Let's call it a day. Jerry, final thoughts.
Tune in tomorrow where Nick will conduct his very own Gamblers Anonymous meeting for all of you degenerate gamblers out there who apply tons of leverage that's unnecessary in this market. Pure Vida.
Oh, that's good. His is way better than mine. No religion. Quit idolizing these motherfuckers because they have a platform. I know don't idolize anybody. Don't ask what people are doing. Ask why they're doing it. Just unpack the why. Don't leverage these.
Ding, 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 ding.
Don't leverage these assholes, including us. Don't leverage us. Don't do shit because we do it or believe things because we believe it. Challenge all of it. Just challenge all of it.
You'll be a better person if you challenge.
Yep. Admission is the first step to recovery. And on that note, don't do anything my poor insolvent drunk, strung out on meth, smoking weed, Quaaludes, angel dust, smoking water, PCP dip cigarettes wouldn't do, which doesn't leave much. But I think she's mixing meth with powdered sugar. She calls it sugar smack. I don't know what that is.
It's all fake news. It's phony stuff. It didn't happen.